Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
Good morning, ladies and gentlemen. Welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. How you doing, AJ?
I'm doing well, Sip. How are you?
Good, good. I feel like we got our weeks mixed up because today's Valentine's Day, and last week we showed up dappered out in our red, and today we're not so red. Although I do see a little red on your shirt, but
Little
happy
pink. My
Valentine.
wife just
Yeah,
yeah, my wife just told me that I should wear this outfit so that I could be a little bit more Valentine-y.
that's right. Well, happy Valentine's Day to all of our lovely viewers. I know that we have some engaged ladies in the audience, but also to the fellas, right? Happy Valentine's Day to all the fellas out there. Starting the week off, things look very positive. We had some inflation data. We had our economic we had the Fed chairman in front of the committees this week, and overall things seem to be very optimistic. We're creeping up towards these all-time highs. What do you want to start with? What do you want to? What was your biggest takeaway this week? What's moving the markets from your perspective, AJ?
Well, I mean, the big movers, of course, are those news headlines, right? So the news headlines, we had, threats of reciprocal tariffs, we had tariffs thrown on steel, but then the big thing was this was a week of economic news, SIP. This was, our monthly week where we kind of get everything from retail sales all the way to industrial production. And so start there with our economic.
Yeah, and it seemed like the big one this week was the CPI, which came in hot, but then the PPI came in a little bit better, and it seems as if the PPI trumped the CPI because we kind of just moved off of that initial CPI reaction. Should we care about one or the other more just before we dig into it?
Sure. Consumer price index is a measure of inflation that the everyday Main Street person is going to see, right? And it's broken down between everything and then just core things because some prices are very volatile, like food and gas. So they'll peel that out and look at the core numbers. Then you've got your producer's price index, which is actually the wholesale inflation that happens at the business level, right? And then there's industrial production. How much are we making? And then, of course, there's retail sales, which industrial production and retail sales were reported just about an hour or so ago. And so those numbers are released as well.
And the consensus has been positive.
A little of everything, right? So consumer price index is hinting at increased inflation. Trump blamed it on Biden. But if this continues, how long can he use that excuse? But the January numbers were a little bit more inflated across the board, core and food. And we know that there's a huge problem with the food right now because of the bird flu. In fact, the bird flu seems to like last week I'm a little paranoid after what happened 5 years ago. And so the bird flu last week had infected 8 humans, and now here in the United States, and now it's up to 68 humans, and one has died in Louisiana. So I'm watching that bird flu, but it's affecting our food big time. First, it started with eggs, but now the virus has jumped to cows, and so it's affecting meat prices and dairy prices because it's showing up in dairy milk. It comes out all yellow and pussy. And so they're having to, w- w- right now, I mean, gosh, I went to Costco and they're limiting the number of eggs you can buy, and the shelves are empty. We might start seeing that trickle down in the next couple of weeks to our meat and our dairy. So all of this is causing some uncertainty. Have you noticed the price of gold, Sip? Did I lose you? Are you guys there? Guys? Hmm. Well, I think that Sip just jumped off for a second. But I think I'm still broadcasting live here, so I'm going to keep on talking a little bit. So, yeah, am I concerned about any of this Federal Reserve stuff? Uh, Not so much. So I'm going to go ahead over here and show you guys some more stuff since I'm kind of running this neat like um oh, Sip just sent me a message. His power went out. So remember, he's in Los Angeles, and they're having torrential rains going on. We had snowstorms here earlier in the week in the East Coast, but he's got floods. So I meant to ask him, but we'll see if he can get back on. In the meantime, hey, let's take a look at some of these different things that I've got. So first of all, let's look at uh, um, let's see if we can't pull up Watch tool. And so as you can see here, you know, the big change as far as interest rates go, especially after kind of the hawkish comments on Tuesday, was that we were thinking that there would probably be a rate drop in June. Those prospects have changed quite drastically. Um, and now it looks like it's more going to be either end of July or more assured September that we're going to see a rate drop. Now, anything can change at a moment's notice with the Federal Reserve piece. So there's that. And then, uh, bond prices remain a little bit stable. We're still concerned about yield inversions, but at the same time, we're also understanding that the Fed continues with their quantitative tightening. They've brought it down from 9 trillion down to 6.8 trillion. Their target is 5 trillion. So they're selling off these bonds and then hoping to let some of the remainder of the bonds expire at the end of this decade, assuming that there's no need for quantitative easing moving forward. So that's kind of the scoop there. So all in all, is monetary policy going to play a big role in the markets? I don't think so. I think it's more about what's going on with our fiscal policy these days. That means, are we going to have a government shutdown in March? That's going to be a big conversation. Let's take a look at our technical analysis. I'm actually going to zoom in to the last 3 months, and I'm going to peel away my uh, drawings here. In fact, I'm going to um, just look at what we've been seeing here because I want you to look down here. You guys probably have already downloaded our free indicator. Hi, Sip. Glad you're back. Um,
Hey,
you guys
total
have already
power down
down.
in the whole building.
Well, I was going to ask, are you guys getting all sorts of rains? Is it flooding there in Los Angeles?
Not by me, so this is surprising, but I have seen it in the
Oh,
neighborhood. But yeah, total
oh,
blackout.
it's
So
just random.
apologize for that. Yeah,
No,
but we
not at
got our
all. I was
backup
just going
system.
over. Yeah, I was just telling the folks that as far as monetary policy change, I don't think that we're in for any, interest rate drops or changes in the quantitative tightening until, the latter half of the year. Last week we were talking about June. I think that's actually getting pushed to July or September, unless something crazy happens, which the probabilities of that happening are pretty high. So then we were moving on to the charts over here, and we identified. So my arrows give us an idea of reversals. Now, what I want you to notice over here is that we were almost thinking that last Friday after close, we were going to get a reversal here only a few days after having our bottom reversal, which those reversals are getting closer and closer together. They're creating a converging or consolidating pattern, and that's actually a little bit troublesome. Along with the price of gold that's skyrocketing. So that means there's a lot of money going into these risk hedges. Pretty much just the price of gold, actually, because Bitcoin's simmered down. Um, Options haven't taken off as seen by the VIX. So really, gold has become that standard that people are putting their money in to defend against any sort of craziness, at least at this point. I guess my conclusion is that confirmation actually fizzled out. This wasn't a top after all. And now I'm going to pull up my different drawings here. This is the drawing of our actual reversals. And so now you can see we're flirting with today's price action. We're flirting with that 100% retracement number. In fact, let me put my rulers up on the screen. When I got my rulers up on the screen, you can see that 100% red line that's in that field of red as we climb here. That's a significant number for us because if we wind up reversing below that, it kind of means that, well, we're going to be continuing with this sideways choppy confusion, but it also means we're ready to identify yet another trend change. We over the last 3 months we've had like 3 or 4 trend changes, which is all kind of encompassing an overall feeling of, you know, what's happening, confusion, uncertainty. Great for premium sellers, Sip.
Yeah, and it seems as if these last 3 or 4 weeks we've been learning to deal with the new administration and the stochastic events that can come from one day it's the Indian prime minister, the next day it's the Israeli prime minister, tariffs here, tariffs that. Yesterday's big
Ukraine war discussions, that was an interesting one.
Yeah, yesterday's a big word was reciprocal tariffs, right?
Reciprocal tariffs. So, what are reciprocal tariffs? Should we talk about that?
Well, I mean, I guess, I give my what I think of it, and then you could give me your perspective. But the way that they're pitching it is it's a one for one. I charge you 10% for aluminum, we charge you 10% for copper, whatever. I don't know the details, but that's kind of the way that Trump's saying is we're going to level the playing field, and on the surface, it sounds like it makes sense.
Yeah. Although it could ignite kind of a trade war because these tariffs, I remember because I lived in Canada for 18 months, right? Maybe a little bit longer, more like closer to 2 years. I lived there from 1998 to 2000, right? And it was interesting because back then in the late 90s, Crutchfield, and I think Crutchfield still is around, but Crutchfield was a cool place where you would order like stereo components and car radios and things like that. So I had been purchasing stuff from Crutchfield for like the, prior 5, 6, 7 years. So I ordered a CD player in Canada at Crutchfield, and then I got a notice that it was waiting for me at waiting for me at a customs area in Canada. And I didn't, being from the United States, I didn't quite understand. When I got there, I mean, I think at the time the CD player was one of those CD players that played like multiple discs. The CD player I think was like $200. And in order for me to get it, I had to come up with an additional $70 because there was 35% tariffs on this thing. And so Canada has quite a few tariffs on the US. It's one of the ways that they make money because they import so much of our finished goods from the United States. Canada has been a great source of raw materials. For the part, a lot of the manufacturing has happened here in the States, or, at least the fit up there. And so one of the ways Canada's made money by putting tariffs on so Donald Trump's answer is if you tariff our products, we're going to tariff your products. Now, it kind of freaked out the market. So, on Wednesday, when the discussion of reciprocal tariffs came out, there was at least an initial drop. Um, Throughout the day, it kind of went back up. But, he signed something yesterday, but it's not gonna go into force until April, and there's gonna be a line item kind of research project between now and April, but, you know, I think we need to think about these tariffs as a way that this current administration is going to be, doing all sorts of different policy.
Yeah, and did you catch any of the Elon Musk in the White House uh, just chit chat with some of the news reporters? Did you catch any of that?
I did. I caught the first few minutes. I caught the I don't even know how to pronounce the little one's name, but he has a 4-year-old.
X.
Oh,
I
just
think
plain old X?
I think it's
Well,
just
I
X.
caught X, kinda talking back to the president. I thought that was hilarious, and I noticed that that's lighting up the internet, over the last couple of days. But, yeah, I listened to a lot of his stuff, and then I switched the channel. Um, it was, he's talking about returning the democracy. Here's the scoop. Currently, you know, the current administration has been voted in, and they have this mandate that they feel like they're following, which is rebuild everything a different way. And they're tearing down all the programs. Um, you know, so far they're starting small, but the plans seem to be that they're going to go across the board and they're just going to implement a different government. And they're not going to like incrementally update like has been done in the past. Their plan is to just rebuild. And so, it's what we asked for, and it's extreme. And there's potential for amazing success. There's also potential for amazing failure. Tearing down a government and rebuilding it is a high risk and potentially high reward um, um, you know, undertaking. So we'll see how that plays out. It could be really good. It could not be so good. We'll have to see.
I honestly have never seen this much transparency, and I know that that was one of the words that they, divvied out back and forth was like, "Oh, well, how are we supposed to trust you, Elon Musk, with the things that you're doing?" And he's like, "Look, we're posting everything." And I, as a consumer, have never seen the things that we pay for with with our tax dollars. So it's somewhat surprising when those curtains are open. And then I thought it was enlightening because he was shedding light on things that are being improved, like the mine shaft, right? He was like, we can only retire 10,000 people because the tubes got to go down into some place where a paper gets put. And it's like, is that really how we run our government? Like, do we really have a shaft down there? Like, we haven't figured out a better way to do this. So that tearing down part seems pretty optimistic if you're letting the guy that's basically invented electric cars and spaceships kind of lead the way. And I guess that's good, but a lot of people aren't ready for it, it seems like.
Yeah. Well, and we'll have to see because a lot of people, depend on a lot of these programs, and it trickles down through a lot of folks. Like, they're talking about slashing or even removing some of the EBT type programs, the food stamp type programs, except for the whole EBT program is linked to the farm subsidies. So if you stop feeding the poor, then the farmers are not going to be able to keep farming. And so you got to watch out about dismantling things because sometimes when you remove a bolt over here, a linkage falls off over here. And as far as things go, if people's are used to something, you know they may want it to stay. We'll see.
Yeah, the big one this week also I keep hearing is the Department of Education. Trump wants to get rid of the Department of Education. Like, okay, well, maybe in time, but not overnight, dude. Like, we need to
Yeah,
like wane off of these things. So,
it
uh,
was interesting. I don't know if you saw that whole thing about the purchase by the State Department for armored Teslas.
yeah, that's where you got a lot of backlash from.
He got a lot of backlash, and since then, the State Department had, first of all, as it was being reported, the website changed and the word Tesla was removed, and then after that, the State Department canceled that order with Tesla for the 400 billion. But 400 billion, interestingly enough, is quite much larger than the USAID budget.
Was
So
it
it was
billion or
interesting.
million? Because I thought it was million. I
It
thought
was
it was
400 million. It was
yeah.
close to a half a billion dollars, but that's so there's people here in DC who have been up in arms about that because there's a lot of people who are losing their jobs here in DC because of working for the government.
Well, it's not even just the government. It's AI and like things are moving really really fast to start 2025 faster than I've ever seen
Yep,
in my lifespan. So,
it's cool.
either get on board or step aside because it's not going to be slowing down anytime soon.
Yeah.
All right, folks. Well, I'm glad I'm able to get back on the stream with you guys. Total blackout in my building, so we'll see what comes of that. But I do appreciate you guys staying online. I did just throw a link to AJ's Quick Links page in the chat. This is where we've got all of AJ's goodies. We've got his free indicators. We've got some access to the other socials. You can learn more about our coaching, trading trainer as a uh, entire program, and then register for the workshop. He's got an awesome daily workshop where he breaks down some of these premium selling strategies. AJ, today we don't have too much on the earnings front, right?
Yeah, earnings is starting to slow down. There's still a couple of companies still out there, but now we're refocusing back on our selling of premium. I just want to point out I'm watching, boy, this 100% retracement. I don't know if you can zoom in on my screen again. We are trying so hard. We've got a doji bar right now where the opening price and the closing price are exactly the same, and we're just flirting so hard with that 100% line, and it's about 6,120 on the S&P 500. This is a significant line to close above or below today. So, that's one of the things we'll be watching.
And on a Friday. I always feel like the Friday setup is always unique heading
Yeah,
into a weekend where you never know what could happen come Sunday evening when the overnight market's open. So that's been
absolutely.
interesting just to start the year that there's these big overnight fluctuations. So we'll keep an eye on that, but it does, bode well for us premium sellers, right? That
Mhm.
contraction where time kind of becomes the income, right? The
Yep,
the
yep.
more time that passes. So we'll go through a couple more examples of that. We're gonna take a quick break. We are streaming live, folks. So if anybody's out there in the world that has a name or a certain position strategy that you want AJ to maybe review, throw it in the chat. If we have time, we'll get to it. Otherwise, we've got AJ's pick of the week, name that he's looking at this week, and some speed round names. Otherwise, this market is humming along heading into Valentine's Day Friday, folks. So sit tight. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Yeah, it's pretty crazy. My power hasn't turned on. Usually it's like a couple minutes and it's back on. So there must be something happening. And
Something's happening.
fortunately for
They
me, I have a
know
very
they they know that the trading trainer crew is going to be, teaching some everyday Joes how to make some money. So they're
some
trying to.
fire, some
Yep.
fire. It's so hot in here that they needed to flood the street so that we could turn down the heat that's coming out of this show, and these winters and these heaters that we're identifying every week. All right, AJ. This week, a name that you're looking at is one that when I think of this name, I'm like, oh, this is a big player in the indexes. Whatever's happening with this name is going to move markets, it's going to move industries, and a lot of people are familiar with it. And so, what you're looking at this week is tech giant Microsoft, ticker symbol MSFT, which is a little bit on the pricey side, right? At 400, but definitely has some movement and a lot of players and opportunities. So, what do you like specifically in Microsoft this week?
I'm going to start off I'm going to start off by zooming out a little bit. So, what I like about Microsoft is that, despite some consolidations here and there, for the most part, they're trading somewhere between about $450, right? That's the majority of the price action. They're in that kind of sideways, undecided. And they're getting ready to release a dividend. Um, it doesn't matter if you buy shares tomorrow. They've already, you know, earmarked who's going to get that dividend. So don't worry about that dividend. But I'm waiting for a bottom signal here, Sip, because I want to do one of my premium trades. But you hit the nail right on the head. It's too expensive. So we're going to have to think of a different strategy. And so what I'm looking forward to do is a vertical spread.
Okay, well, let's walk me through it. So, is that we're going to use two options to kind of offset each other because of the price of the stock? It doesn't require us to take on that much risk because we have two options that kind of offset each other a little bit.
And that's exactly right. But I do want to point out, um, so vertical spreads, and not so much now because a lot of people got burned. but about 10 to 15 years ago, vertical spread education courses were the soup du jour, right? Everybody and their brother had written a guide on how to trade vertical spreads. And where almost all of them missed the boat was how much risk is actually involved in a vertical spread. And whether you're talking about debit spreads or credit spreads, they're actually synthetic equivalencies of each other. It doesn't matter. They're still the same amount of risk. So, what you want to make sure if you're going to use a vertical spread strategy, you want to make sure that you, are only investing the amount that you're ready to lose, because in a vertical spread, it can quickly go from profiting to losing the whole thing. So if the only amount that you want to put on the table is, say, 2, 3, 4% of your portfolio, that's the size of your position in vertical spreads. Don't go bigger than that. The big thing that happened 10, 15 years ago is people would put like 50% of their portfolio into a single position, and then, within a split second, they just lost 50% of their portfolio. So just be aware of that nuance with vertical spreads. Typically, I tell my folks to not risk more than 4%. In our case, I'm talking about using what's called a bull vertical spread. So I want to wait for my indicator and my follow through to come and tell me that a bottom has been found. And then I'm going to construct a bull vertical spread. And it could be a bull call vertical debit spread, or it could be a bull put vertical credit spread. Again, doesn't matter. If you're going to do credit spreads, make sure you have a margin account, because it's required for doing a credit spread. But I'm going to go ahead and place that spread once I've got a confirmed bottom, and I'm going to go maybe 2 to 3 weeks out. So here's a case where I might use weekly options. I pick a strike price that is maybe not so much lower than where my reversal occurred. So if my reversal winds up occurring at $405, I might do 400 and 250 and 400. So you pick two strike prices next to each other. And I would just buy that thing and let it expire 2 to 3 weeks from then. And it's one of those ones where the clock just works in our benefit.
Yeah, I mean, just looking at this chart, on the low end, that 400, on the high end, that 470, that's a pretty wide range in stock movement, even on the expensive side. So what you're saying is, this spread would risk 4%, but could profit how much in theory?
I mean, some of these spreads can go up. Let's take a look. I'm going to go ahead and pull up our options lookup tool. This is one of my favorite things. And by the way, we're still giving advanced, anybody who wants to access the options lookup tool, you just have to go and get free access, go and download our indicators, and we're automatically giving you access to our options lookup tool. But you go to the options lookup tool, we're going to take a look at some of these Microsoft options, and we can do this right here, right now. Microsoft options. I've got, let's say, 10 different strike prices, and I'm going to want to go, like I said, maybe 2 to 3 weeks out. If you're going to do, if you're going to do your monthlies, it's the third Friday of the month, so that would be February 21st or even the March 21st option. But here, let's take a look. If you're going to do, for instance, the call debit spread, then you would pick the two strike prices that are kind of in the money here. And you'll notice, do you see here, Sip, that there's a $2 difference in price between the 407.50 and the 405? Actually, a
Yeah.
little less. Here, let me pull up my calculator, and we'll just give people a quick example of how this works. So here's my calculator. So the one is $5.85, and the other is $4.33. So you'll see it's currently trading, or at least at the end of day of yesterday, it was trading at $1.52. If you do this one, vertical spread, meaning you're using the two strike prices next to each other, same expiration date, right? So you see that $1.52.
That's right.
So long as prices stay above that 407.50, and that's why we wait for a confirmed reversal up. So long as prices stay above that 407.50, this will grow by February 21st to $2.50. It grows to the difference of the strike prices. So it goes from $1.52 to $2.50. So you're making, if I do my little math here, $2.50 minus the $1.52, you're making 98 cents of profit, and that would be an ROI of about 64, 65% ROI. So if you can pretty much make 2/3 of your investment in profit. That's pretty phenomenal, right?
It certainly is, and that's only for like a week, right? Because if you're looking at the 21st, that's next Friday.
Yeah, that's a week away. Now, this was, again, the end of day prices. Basically, when you get your confirmed bottom, we're going to go about 2 to 3 weeks out, or if you have to stretch it out to the next monthly, do that. And then, pick the two strike prices right below that confirmed reversal, and then size the position no more than, what you could lose of your portfolio. So we already went over that
Yeah.
example.
All right. Well, AJ's pick of the week, high flying tech name, one of the FANGs, right? Microsoft, ticker symbol MSFT, which is doing a lot in the AI space, has a lot of products, a lot of recurring revenues, a lot of cloud stuff. So,
I mean,
uh, the
Microsoft is the one who partnered with OpenAI.
Yeah, and surprisingly, I don't really use any of their AI software, but maybe I do subconsciously, not necessarily knowing it through Chat GPT. Um, but that's what AJ likes this week. Microsoft, we'll keep an eye on that. We've got our speed round. We've got a couple of names, AJ, that the folks across the country want your perspective on. Starting with Chris in Bozeman, Montana. Chris is an active user, it sounds like. And he wants to know your take on Nike, which I believe beat earnings expectations recently, but still has been struggling when you look at it over the past, couple of months.
All right, I've pulled up Nike here. I'm going to come back to a more traditional 6-month chart. I see they also have a dividend coming up. Usually, the folks who get to capitalize on that dividend, there's a cutoff date of when you have to own the stock by in order to realize that dividend. So, buying the stock now sets us up for the dividend after that one, but not this. But I see where you're going with this. You're thinking you either, you're seeing a double bottom. I am too. You're thinking now would be a good time to buy some Nike stock, or maybe buy some Nike substitute options. Let's take a look at our options lookup tool, and we'll throw Nike in there. And let's see what kind of substitute option, if we want one that is just going to be moving, trading at parity, what kind of option we'd be interested in. And I'll help you pick one right now. So I'm looking at all my strike prices. I'm looking at the price components. If I'm going to buy a substitute option, I probably want to go, more than 6 months, maybe even 8 months out in time. I don't want this thing expiring tomorrow. So I'm thinking August or September, maybe September's options. And then I want to go deep enough in the money that I get that, extrinsic component of price. There's always an intrinsic and an extrinsic, as low as I can without getting into liquidity issues. And I think I found one. I think I'm interested in this either $55 or $60 September call. I think either one of those would be absolutely fantastic. I'm actually gravitating towards the $55 call, and that's if you want to just basically use a substitute option. And what's beautiful, Sip, is if Chris from Bozeman, Montana, purchases this option, he can then sell premium not only against the stock, but he can sell it against this option. So he can get in at a much cheaper price instead of where's Nike trading? 72, $73. Instead of that 72, $73, he's thinking about getting in it for as little as $20 per share and then being able to sell the premium against it in the future. So, Chris, I think you're onto something. My only thing to say to you is make sure you identify a bottom. We did get an end of day signal using our indicator yesterday evening, but I'm not getting follow through today. So make sure you make that all the planets are aligned with your signaling before you pull the trigger and buy either the stock or buy that substitute option.
Yeah, I'm curious how much Nike might be affected by the tariff stuff, because I imagine that they're doing a lot of importing of their products. So I wonder if that has any impact on them, and or is Nike's brand finally dying down because they've been the leader of sports apparel for like 30 years. So maybe it's a good time to start to get in on this pullback. So we'll keep an eye on that. Thank you for that, Chris. AJ, thank you for the breakdown. Moving on to our second name, Kathy in Reno, Nevada wants to know your take on a very hot name this week in all the news, and that's Lyft, ticker symbol LYFT. For a number of reasons, they had earnings that were disappointing, and I believe there's a lot of chatter when you look at Lyft compared to Uber. Are they going to be doing similar things? But it looks like it took a little bit of a short-term hit here.
It took a little short-term hit, but to be honest, it's already on the recovery. So I think Kathy from Reno, Nevada, I think I know what you're thinking. Should I buy low now that the price has dipped? And interestingly enough, this isn't the traditional pattern that I would, trade premium on per se, because it's not really sideways choppy between a known level of support or resistance. In fact, what we had been seeing since about January 1st is that Lyft was kind of building up pressure, some uncertainty, almost like you wanted to prepare for a breakout. So I almost go back to, what do you feel about the fundamentals? I want you to do some research on Lyft, and if you're confident with Lyft, and you want to own some of this stock, then wait for a strong signal saying that there's a bottom being found. And then, yeah, I could see it's cheap enough for you to just buy the stock. I could see buying some of this stock, but I wouldn't go overboard. I would, use some clear position sizing rules. Make sure you know where your bailout would be. So, where would you throw in the towel at what price? So, if I was purchasing this stock at $13 and maybe at 11.50 is where I would put the line in the sand, make sure you understand what a $1.50 drop per share would do. Size your position accordingly so that if you lost a $1.50 per share, that would be less than, like I said earlier, less than 4% of your portfolio. And actually, the bigger your portfolio grows, maybe you make it even less than 4%, 3%, 2%, 1%, whatever you're willing to risk of your portfolio. Size this position accordingly. And then, yeah, it could turn into a directional position. it could turn into a premium selling position. You'd have to play it kind of by ear, but um, I can see where you're going with this. Just make sure fundamentally, you know, the fundamentals of this company agree with whatever your checklist is before you just blanketly go purchase this, because the pattern, the technical pattern isn't lending itself as well to a premium selling
Yeah,
position.
pretty decent price point at the $12. And I believe they're starting to do some of this autonomous driving experimentation, which is a huge initiative for Uber. And I don't know if you saw the what's the Pershing Square, Bill Ackman or something. He came out with a whole report this week on why they're getting in on Uber, and even for like, the next 7 years or so. So I could see Lyft kind of taking advantage of those shifts in just technology and people's traveling habits. The other big thing that Lyft is all in the news about is there's this super hefty rapper, like she's like 400 pounds, and she's suing the company because one of the drivers didn't want to pick her up and canceled the ride on her. So that's all over the news, and Lyft is definitely getting hit hard with that. But I think it's more of a headline grab. Otherwise, Lyft has stuck around, right? They were one of the two first driver apps, and Uber seemed to just buy everybody up. But Lyft has been, kind of in that number two seat for quite some time, and looks like they're not going away anytime soon. So
No, they seem to keep sticking out. I think it's, you know, pure stubbornness. I don't know. It's been a few years now, but did you ever see that documentary? I think it was on Showtime, of Uber and its initial
oh yeah, it's
upbringing.
streaming on Netflix now if anybody wants to catch it. But it's a fabulous series.
It's absolutely. We really dug it. My family really dug it. And it was interesting. They kind of like, at the time, and they've since gone through a transformation. But the original CEO was, quite aggressive. And, sometimes things play out in the public. And I think that CEO pissed off the CEO of Lyft. Lyft was actually open to being acquired by Uber, and then decided, no, we're just going to continue to be a thorn in your side. But, for a premium seller, I think there's potential there. There's probably lower hanging fruits. But if you're really into it, I think there's an opportunity for you to buy some low price stock here, or even a substitute option. I bet you there's one of
Yeah,
those too.
question. Have you seen any of the Waymos driving around, the self-driving cars?
I only saw that last time I was in Las Vegas. In fact, I insisted on finding one so that we could see what it was like to ride around in it. But I heard that story of the guy who wanted to catch an Uber to his airplane, to his and it just kept going around the block.
Yeah, but they're everywhere around me, AJ. I mean, I will pull up to a stop. I
Are
will
they really in LA?
I will pull up to a stoplight, and there would be like three or four. Like they're so like just accepted now that nobody even looks at the car as like it's a self-driving car. So like if 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 there's any place that I could see the future going, like it's being accepted quickly, very quickly here. And I think Texas is the next market where they're taking, like Austin, where they're taking a lot of the new autonomous driving. But I could see Lyft really getting in on that, just because they do have the user base. They just need to get the technology up to speed.
Yeah, I mean, talk about cost savings and efficiencies. That's kind of, I have to say, and I know that I owe you some pictures of this truck that we bought like 6 months ago. But dude, I had business for the last couple of days up in Baltimore, and Washington D.C. traffic is I think only second to New York City traffic, but or maybe L.A. traffic. What am I saying? LA traffic's pretty bad, but you set the truck to drive and then it just goes. I love the Ford Blue Cruise technology. So even in traffic, that's my favorite part, because I hate stop and go traffic. But if I can be sitting there and checking out things on my phone and just let it deal with the traffic, it's fantastic. So I'm looking forward to the future of, even more autonomy on
Yeah, I
the
feel like
roads.
Ford doesn't get the love like you described from just the consumer base, because it sounds like it's got all the features of, the Rivians and the Teslas. They're just the first manufacturer. All right, so we'll get those picks soon enough. We'll post some guys. We'll get AJ decked out in front of the what is it called? The
The
Ford
Lightning.
Lightning. All right.
Yeah, it's pretty
But we
pretty
do have
cool.
one final name, pretty boring name, but maybe that's good for us here. This is Drew out of Long Island, New York, wants to know about Xerox, ticker symbol XRX, a name that we do bring up on the show every once in a while.
Well, I love this one for premium selling. You can see it has more of the pattern that I like. And you can see this is my indicator. This is called the Fast MACD indicator that you can download from our quick links page. I urge you to go do that. And you can see that that indicator is giving us pretty accurate ideas of the tops and bottoms of this. And so I kind of see what Drew from Long Island is seeing here. We got a bottom signal yesterday evening. I'm not seeing the follow through yet, Drew, so I don't want you to pull the trigger. But look, Xerox is also even less expensive than Lyft. You could buy 100 shares of Xerox. I want to see really quick if there is a substitute option. So again, go download the indicators, go sign up for the options lookup tool. It's the same thing. You just have to get free access to our web portal and you can get all that good stuff. But let me take a look at Xerox substitute options, probably thinking the October series. Yeah, I would go with the October $5 call as a substitute to buying the stock. This thing's only going for $3.25 or $325 per contract versus $8. So, you're getting it for about a third of the price, maybe a little 40% of the price, and you're getting that almost dollar for dollar movement. So, you know what, Drew? Look at the Xerox October $5 calls as a potential buy for when you identify a clear, and then see where it tops out. For instance, if it starts to go through the roof, if it goes above $10, then I would look to just exit at its highest. But if it decides to start to reverse back down like it did a couple other times between 9 and 950, sell your premium, buy your protection, and turn this into a moneymaker, right? Just start collecting rents on owning the stock. That's what I would do with Xerox. I love this stock for selling premium. It's on my watch list too, Drew.
Totally. And this is one of those examples where the boring works out for us because the time passing is where the most value comes, and it's a great price at $8. So whenever we could find these, 10 and under names, which isn't that often, definitely add it to the watch list. So thanks for bringing this one up, Drew. Keep an eye on it or we'll keep an eye on it because it's definitely looking like it's got a bottom there. So
It's got a buy opportunity. It's coming. Just wait for the signal to get follow through.
So that's our last name in the speed round. I did have one stat, AJ, that came up this week that I was curious on getting your feedback on to close the week out. So let me go ahead and pull this up. This is the 30-year mortgage back above 750, near its highest level in 25 years. And so what are your thoughts with the market, the overall market hitting these all-time highs, and this 30-year mortgage still kind of having impasse on the housing market? Do you see, because I know we've gone over some of the yield curves and stuff, does this bring any ideas or thoughts to you as I bring up this chart?
Yeah, there was a point leading up, we had uberly low interest rates for about 20 years there, um, which is a fraction of time that mortgages have been available, right? And people started to believe that that was the normal rate. But I actually think, Sip, that this is going to be uh, the new normal, if not bringing back normal. So unless something happens, another pandemic or another, you know, the U.S. has a lot to do with housing. Getting housing under control. We've got too many people, not enough places for them to stay. So until that happens, until we kind of tame the inflation, I think we better get used to these 7%. I don't see that changing, uh, at least in the last half of this, 2020s.
All right. Well, I know that this is something that they continue to bring up in the news, and yeah, that's good to know that those low interest rate times may be past for the next couple of years, maybe
And
even.
anything can change. I mean, we're literally rebuilding everything. And so, don't trust me, trust yourself.
Well, look, Trump said to lower rates, so it seems as if once the we did lower rates, those that 10-year kind of continued to move against it, which you could keep lowering rates, but if the demand and the supply itself doesn't move, I mean, there's really no real impact, is there?
You got to remember that mortgage rates are not related to the Fed interest rate, right? Mortgage rates are related to the 10-year bond. Fed interest rates, if anything, that's the overnight lending rate. That's the, rate. That's what you'd see more on like a 1-month bond or a 3-month bond, not a 10-year bond. So, that is moved based on confidence and fear in the fiat currency. So, and I know I'm simplifying economics here, but I think that those interest rates are at that rate, for a while now. Now, again, we did get the undoing of that yield inversion curve, which historically has led to a recession, but it could be that, a lot of this stuff that the Fed's doing with quantitative tightening is skewing what's happening. So it could mean that we're skating past a recession, but there's still a lot of economists who are saying any day now we're going to start seeing the bottom of the market drop out. So we'll see. So far, things are working. We're just going to trade day by day. We know we have a toolbox of option strategies that profit whether the market's going up, down, or sideways. Just have to make sure we use the right one at the right time.
All right, so heading into next week, what should we be keeping an eye on? These new all-time highs would be my guess.
Yeah, I think, coming at the broad market, I think what I'm going to be paying attention to, Sip, is where we get this top reversal. And I'm paying really close attention to this 6120 line, 611871 on my charts. I want to know, am I going to reverse above that or below that? Because that's going to be a significant, at least in the short term, a significant level. Other than that, I'm back into the mode of premium selling. And, if things are too expensive, I'm looking at different strategies like those vertical spread strategies. Just know that, are tried and true, legging into those various premium selling positions at the lower end of the price. Those are the ones that, really can create a almost hands-off portfolio approach. Vertical spreads, you have to be more of an active trader to trade. So I'm still really leaning towards, like the Xerox and lifts in the world.
Yeah. All right. So with that, once again, I want to give everyone an opportunity to check out AJ's Quicks link page. This has got some of the socials. So if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. You got access to AJ's indicator suite there. You've got the workshop link. We've got some information about coaching. And as always, wherever you're watching the stream, if you have a question, feel free to drop it in the comments and or hit us in one of the DMs, and someone will get back to you. Otherwise, AJ, thank you for taking some time today.
What's your plans for tonight, Sip?
I'm playing it by ear. It's a little different when you're not married, when Valentine's Day comes around. I have some options that I haven't really finalized yet.
I already delivered the chocolates to the missus. I'm going to we're going to do this thing where once the little one comes home from school, Liza's going to get her all dressed up, and I'm going to go out the back door and the front door with some flowers, and I'm going to spend a day with her today. I think we're going to the trampoline park and then maybe go get a smoothie together. So make it a really special day for my little daughter. And then tomorrow night is the big night with the missus. So I love's in the air.
That's great. That's great to hear, and it's great to make it a family affair. So, Cooper, I got you on Valentine's Day snuggles tonight, buddy.
Cooper is Cyprian's little puppy. I love it.
Puppy. Yeah, you might hear him in the background. All right, AJ, folks, thank you everybody for tuning in. We truly do appreciate it. Please, please, please hit that like, hit that follow, hit that subscribe
Tell your friends.
button, and enjoy your Valentine's Day night. We'll catch everybody next week. Have a good one, guys.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button